The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Welcome to this episode of the Banking Scene Director's Cut, where today we have Rachael Hadaway, Vice President of Product Management at FICO, who's going to be talking to us about Agentic AI. Welcome to the show, Rachael.
Thank you. Thanks for having me.
And I'm going to dive straight in on the topic of agentic, because we get pulled into a lot of discussions at the moment about what's agentic and what's not, what's just an automated workflow, what's RPA. So the key question to you is, everybody's saying agentic, but what actually can become more autonomous in a bank?
Yeah, it's a great question. And honestly, if I had a nickel for every slide deck I've seen that puts agentic in front of a chatbot, I would pay for my daughter's college education.
There we
So I'm going to try to separate the genuinely new from what's just been rebranded. And I think over the next 12 to 36 months, the workflows that are going to be credibly moving from the model assisted to agent drivens are the ones that have three properties. First, they have a tight, well instrumented decision boundary. They have a high volume of repetitive subtasks that are individually low stakes. And third, they have a clear escalation path when the agent isn't confident. So when they have some sort of doubt. So the types of workflows that I think are going to fall into this rubric are things like intake and triage, fraud case enrichment, know your customer remediation queues, collections contact strategy, and a long tail of servicing tickets where the agent can pull the policy, pull the account, draft the resolution, and route. These are not, AI does everything. They are agents that own the connective tissue between systems and humans. What I think is being oversold right now are anything that touches credit decisioning and originations, complex underwriting, complaints adjudication. I think these workflows will eventually get faster and better instrumented. But I don't think the agents in the short term are going to be making binding decisions in this horizon. And I think anybody that's kind of selling, agentic underwriting today is probably selling a co-pilot with better marketing. And that's okay. And I think we'll probably talk a little bit more about, the maturity curve that agentic is on.
Actually, it's an interesting one that you brought up, credit decisioning, because that has been proposed as a key possibility, or an area at least where people are investigating at the moment. So for you, one of the things that you said there was escalation to a human where there is doubt, and I love
Yes.
that phrasing. That's a
Yes.
thing. So where do you think banks should draw the line between agent authority and human authority?
I think it's not necessarily a line. I
Hmm.
think it's, unfortunately, I think it's more like a grid. And so I think there's this heuristic that exists that includes two axes. The first is reversibility, and the second is customer or financial impact. So imagine a world where you have, kind of high reversibility, low impact. And that's great. The agent acts, it logs, it moves on with no human required. And then on the opposite end, you have this, low reversibility, high impact. And that's, fully human owned. That's like where the stakes are super high. And so I think we're constantly working in this rubric that's going to be changing where, you have to decide where these use cases fit. And if it's not a highly reversible situation, then it probably is something that still remains very human owned, especially when the stakes are high. And so I think use cases are going to be floating in and out of this rubric for some time. And I think reversibility is probably the most underrated dimension. So regulators care about it, customers care about it. And I think probably technology is consistently underrating it. So a wrong fraud decline that's reversed in 2 minutes is probably okay. A wrong account closure that takes 6 weeks to unwind is a complaint, a regulatory exposure, probably, like a LinkedIn post. So I think the ability to reverse is really important here.
And one of the things that you had said is things are going to move through this rubric over time. What do you think is going to make them move through there? Do you think this is more trust in the agent's ability as the agent matures? What is going to take that to change that, going beyond the reversibility? Because ultimately you would want to do as much as possible, probably, um, that could be automated. So if it's low reversibility and high stakes at the moment that requires a human, potentially all that's left for the humans to do is the high stakes work, and then they get overburdened with the volume of high stakes work because some clever accountant has said, oh yeah, but we can get rid of 30% of our staff. Let's get rid of 3,000 of them because we don't need them anymore. And suddenly you've only got this high value, high stakes work to do, and you've also got to automate that. What's going to take it to get that to shift?
I honestly, I think it's kind of an unsexy answer. I think it's high reps. It's the training and the consistency against some of these high stakes cases. And I don't think you do it at scale to start. I think you do it, over time in small areas with human oversight. And I think the more trust you have in your system, the more likely you're giving it more cases and you're able to, with oversight, trust it more and give it more. But I think it's going to take, a high degree of reps before you're letting it really truly make decisions. I don't have a perfect answer on how long it takes to get to that point, but I do think it does take reps.
I was actually having this discussion with Rick, our MD, yesterday, and he turned round and he said, it is definitely the more consistent something gets done over time. And he turned around to me and he said, look, Andrew, when you first started working for me,
Absolutely.
um, I didn't trust you to do the high
Yep.
stake stuff. And he said,
Yep.
over time, more and more of your work, I've put it onto you and I trust you. That trust boundary
Yep.
is very. And I thought,
Yep.
actually a good way of looking at it. And he said, in his personal opinion, it's treating the AI like an employee, and you would delegate more responsibility to that employee over time. Now, going back just one last bit around the human's responsibility in that sort of high stakes environment, a concern was raised recently at one of our roundtables that the human in the loop is in danger of just being a rubber stamper. Do you have experience? Have you come across that at the moment where banks have literally the humans that are in the loop are serving no purpose other than to take the fall if something goes wrong? And how should banks think about that so that the human doesn't just become a quick glance rubber stamp, let's get it off my desk?
Yeah. I wish we were at the stage where humans were even there yet. I think in many cases they're having to triage and do a lot more than that. I think things are coming into their queues faster than that. But I do think we do want people to stop the trend of becoming rubber stampers. And I think there's three things that have to happen. First, the human review has to surface the agent's reasoning, not just its output. So I think that's going to be really important. If the reviewer can't see why, they'll just click yes. And so I think that's really important. Second, they have to build in deliberate friction for high stakes approvals. A second reviewer, a justification field. And third, we have to measure override rates by reviewer and by action type. If override rates are, near zero, you have rubber stamping. If they're erratic, you have, kind of a calibration problem with the agents. I think we have to have good telemetry, good metrics in order to make sure we don't just have rubber stamping. And when we have rubber stamping, we're probably making some bad decisions. So I think we are in danger, maybe in, 12, 36, months. I think right now we're probably having a situation where agents are probably doing more intervention than we probably want.
Interesting that you had said override rates, if they are near zero, is an indication of rubber stamping. It could also be an indication of a really good agent.
It could
Um,
be.
so
It
it
could
would
be.
it would be a careful balancing act to make sure that yeah, I'm not
The,
sure. I'm just throwing
here's
in a
here's the thing that I've learned. And we're in the process at FICO of building agents like this. And when we start turning it loose on real cases, the amount of corner cases that we find in real life that we just have never simulated before is astronomical. So the idea that you will ever get into a situation where it falls to below zero, just I can't, sometimes I just can't even fathom the number of real life situations that we've never planned for, and all of the work that we do to train these agents, that I mean, eventually it'll get to zero. I feel like that's a long time from now.
now. I want to jump to another hot topic of FICOs, and that is agentic customers. One of
Yeah.
my favorite topics at the moment. What changes for banks in the world of agentic customers?
This is one of my favorite topics, and one that I talk about and write about all the time. And I think it's one that banks are not ready for. And, when a customer is now represented by an agent, every assumption that a bank has about the customer journey is going to break. You know, Many times banks have set up customer journeys to include friction. And sometimes that friction is a substitute for value. So imagine, a cross sell pop up, a opaque pricing tier, phone us to cancel, all of those things, we kind of, baked into the customer value. An agent doesn't feel that friction. They're programmed to not fall victim to any of that stuff that a human and human emotions do. It just roots around it, or it terminates the relationship. It is goal oriented. And so, that journey has to change. And I think the banks that are going to be the most successful, they're going to recognize that value has changed for the customer, because the agent is going to be most successful when they're building towards, machine readable propositions. The negotiation is going to happen in seconds. It, and they have to plan for that, because they're in a sea of, you know, competition. The ones that are going to be successful are the ones that are planning for the customer to have an agent.
Do you think that this is going to end up with the commoditization of banking? I know if you've been in banking long enough, you've heard this whole story before about how banking is going to become dumb pipes, and it never does, or never has in the past. But do you think that in a world of customer agents, the banks are just going to become commodities, and
I
we're
mean,
all going to let our agents loose to go and fight on our behalf?
maybe. So if you think back to the early 2000s and, like, insurance times, where it was this whole price comparison sites, and, people, price shopped, and everyone thought it was going to be the end of, differentiation. And that didn't happen. We still are buying insurance, and, the whole thing. The reality is that what people are going to value is going to change. And so it's going to be uncomfortable for a period of time. And, banks have made margin on opacity, complex fee structures, hidden conversion rates, retention offers that are only revealed when you threaten to leave. And so now what it's going to be valuable to a customer is going to be clear, structured product terms. You know, all of that will win share at the expense of banks that don't. Eventually, will they all get there? Yes. But things that aren't going to change are going to be, clear rules of engagement, convenience. having the best product. And so I think there's going to be this messy middle that probably will exist for the next 3 to 4 years, but things will settle out again. And, banks will have to compete on true value and not on, in kind of this murkiness that has kind of allowed banks to survive.
So trying not to give you an opening for a product pitch, but I am curious if FICO is helping banks restructure their services in such a way that they become agent consumable. And that's not a blatant plug to anybody who's
Yeah.
listening. I've got no skin in the
Yeah.
game, but I'm curious to know who is helping. Is this something that you help banks with?
That's certainly part of our ambition. When we think about kind of a unified decisioning platform, it is to help, customers ultimately to have a cross life cycle consistency so that one of the things that happens at a bank that can be really frustrating to customers is whether you're talking to collections or you're having a marketing, every experience is different. I mean, I've had my own experience where you get a marketing offer, you go into the bank and they've never heard of it. So how do you create for an agent that is, again, goal oriented, this kind of cross life cycle consistency? And so part of our decisioning, platform is make it very readable for an agent, make it consistent. So how do you set up an environment where an agent can thrive on behalf of a customer? And if you put the customer and event in essentially their agent, their, representation at the center, then banks should win.
You brought up the term unified decisioning, and I believe that that's something that FICO's previously framed as a competitive moat in fraud. Can you tell me a little bit about just unified decisioning and what advantages it is and how that works?
Yeah, it's essentially like an orchestration layer for decisions that spans fraud, credit, AML, servicing, marketing. And essentially, it is the bank's decisioning brain. And it provides governance clarity more so than, any single business KPI. And its whole goal is to make sure that we're allowing for that cross lifecycle consistency, and manage all the models and the data and, all of the decisioning in one place so that a bank is able to service a customer without borders, without, kind of the intermediation that typical point solutions might have.
Now, but specifically brought up fraud because it was the topic of our most recent white paper that we've just published. Not the paper that we're busy talking to you about, but um, eh, FICO is very a key player within the fraud and fraud fighting, should I say?
Yes.
Sorry, you're not
Yes.
a keen player in fraud, you're a keen player in the fraud fighting part of
Yes.
the industry.
Although in some cases, the same technology that is fighting it is also creating it.
And that's the thing is that uh, fraud is becoming AI enabled.
Absolutely.
How is FICO helping combat fraud through AI?
Yeah. I mean, the really our mantra is the only way to catch more fraud is to work more fraud cases. And so we think that, agentic solutions allow us to accomplish that goal. And certainly the rise of AI, the rise of agentic is enabling fraudsters to become more creative, more prolific in their in the ways that they are, unfortunately duping customers. And so we see this as a really important tool for banks to help fight fraud on behalf of their customers, and the scale and the speed that these tools are helping banks um, to capture more fraud is really important. And so our whole mission is like, how do we train essentially some dumb technology to act like, fraud investigators, and how do we train them to, to catch more fraud? As I mentioned, this is a little bit of a, alluding, we see such new and creative ways all the time, which is why man, the second we think we've got something really smart, then somebody will come up with a new, a new tactic, and we have to retrain it and expand our definition of what is fraud, and that is never, unfortunately, I don't think is going to end in probably my lifetime. And so it's a never ending challenge with this technology and these tools.
It's a job for life.
Yes.
I haven't got many more minutes left with you, but I want to take advantage of the time that we've got left because you sit in the US, but you also work across Europe. You can bring us a bit of a unique perspective. I don't often get people from the US that I have the opportunity to interview.
Yes.
Where do you see the biggest differences between how banks in the USA are approaching agentic AI or AI driven workflows versus Europeans?
Yeah.
How does regulation play a part? What are you seeing? What are the biggest
Yeah.
differences?
And my job is global, so I talk to banks all over the world, and here's what I find. The cliche is that Europe is more cautious, and honestly, that's not quite right. Europe is more procedural, and the US is more permissive at the experiment stage, but they're increasingly aggressive at the enforcement stage. And so, what I find is that European banks are not slower because they're afraid. They're slower because the control expectations are clearer and they're building to them up front. And that's pragmatism. And what I find is that US banks often move faster initially and then spend a year retrofitting governance after the fact. And so net, the time to production isn't that different.
Okay.
And so what I'm seeing now is that, the trend is that US banks are trying to adopt a more European approach to control up front. And the European banks are trying to give teams a little bit more freedom in experimentation. And I think honestly that is kind of the right mix. And if they can find the right balance of experimentation with control, we're all going to get to the right place in the right speed.
It's a really great insight that. So one last bit of closing insight that I'm going to look to you for. Um, some advice to the banks in the Benelux region if they want to prepare for an agentic future without getting distracted by all of the headline hype that's going on at the moment. What's a couple of moves that you think there's
Yeah.
in absolute table stakes that they need to do now?
Yeah. The first thing is, you know, create an inventory of the decisions that you make. Oftentimes, people rush to the technology and they don't actually know the decisions that they make every single day. That is the first step. The second is invest in the policy and an evidence layer before the agent layer. So the instinct is to build the agents and figure out the governance layer later. Resist that. Start to think through the version policies and decision logs and the clean audit view UX. And then start to think through your agents. And finally, and this is probably the most important and the hardest, pick 2 production cases, not 20 pilots. So, like, if it were me and I were giving advice, I would say, fraud case management, servicing workflow might be a good place to start working, because the data is rich and failure modes are bounded. But pick a couple and get started. But do so with understanding your decisions, having your policy and evidence layer in place.
Fabulous. And we're hard up on time. Thank you very much for joining us, Rachel. I could have carried on for at least another hour asking you questions there. Great to have you on the show.
It was wonderful. Thank you.